BlackRock isn't a household name, but it's pulling levers behind the scenes everywhere. From Wall Street to Main Street, from Washington to Beijing, BlackRock's influence is unmatched. And it all starts with one man's ambition 4 decades ago. In the late 1960s, while other teenagers dreamed of peace and love, Larry Fink was dreaming of power. The son of a shoe store owner in California, young Larry wanted to be spoken of in the same breath as presidents and kings. He thought politics was his path, until he discovered the world of finance. By the 1980s, Fink had become a Wall Street hotshot at First Boston, pioneering a new financial product that would revolutionize banking: mortgage-backed securities. These bundles of home loans, basically financial casseroles of mortgages, were cutting edge, and Fink helped invent and popularize them. For a while, he made money hand over fist and climbed the ranks faster than anyone. By age 34, he was a managing director and even talked about as a future CEO. But Wall Street loves to humble even its brightest stars. In 1986, Larry Fink bet big that interest rates would rise. And he was dead wrong. Rates fell, and a tiny calculation error in his hedge multiplied into a disaster. His department lost $100 million overnight, an almost unimaginable sum at the time. The whiz kid's ego was shattered. His meteoric rise came screeching to a halt. That failure hurt. It cost him a shot at First Boston's top job, but it also taught Fink a lesson that would define his future. He realized risk management was king. If he ever got a second chance, he'd build a firm that never makes the big mistake again.
And in the second quarter of 1986, we lost $100 million.
2 years later, in 1988, Fink got his chance. Backed by the Blackstone Group, he co-founded a new investment company, BlackRock. Its mission: to manage money with an obsessive focus on risk, to know at any given moment exactly how much could be lost on a bad bet. Fink's timing was perfect. Over the 1990s and 2000s, as markets boomed and busted, BlackRock grew by being the smartest guy in the room about managing complex financial risks. They even built a software platform called Aladdin, which could analyze thousands of scenarios on massive portfolios in a blink. A risk management empire born from Fink's earlier missteps. While Larry Fink kept a low public profile, BlackRock quietly turned into a financial titan. By 2009, it was big enough to buy Barclays' investment fund business, becoming the world's largest money manager. Today, BlackRock oversees roughly $10 to $11 trillion for clients around the globe, from pension funds and college endowments to the savings of ordinary people. If you have a 401k or retirement fund, there's a good chance BlackRock's fingers are on it. The company's influence is so vast that by 2010, some on Wall Street whispered that BlackRock was too big to fail, and likened it to the Blackwater of finance, almost a shadow government. BlackRock's rise wasn't just about making money, it was about being in the right place at the right time. Whenever a financial crisis hit, Larry Fink positioned BlackRock as the go-to problem solver. 2008, the mortgage meltdown. Who did the US Treasury and Federal Reserve call to help clean up the mess? BlackRock. Fink's team was entrusted to manage $130 billion of toxic assets the government took over from Bear Stearns and AIG. They scrutinized trillions on the balance sheets of Fannie Mae and Freddie Mac. In essence, BlackRock became the leading manager of Washington's bailout. U.S. officials turned to Fink so often that insiders said he was at the hub of the wheel of American capitalism during the crisis. Fast forward to 2020, when markets were in freefall due to the pandemic. Again, the U.S. government tapped BlackRock. The Federal Reserve hired BlackRock to run a massive bond buying program, purchasing hundreds of billions in corporate debt to stabilize markets. This was unprecedented. A private firm essentially executing central bank actions. Lawmakers from both parties raised eyebrows at this cozy arrangement. After all, BlackRock was and still is a dominant investor in those same markets. Was it a conflict of interest? They could potentially decide which companies' bonds to support, while also managing money for clients who held those bonds. A U.S. congressman noted, "They're huge, not bound by the same rules as banks," urging more oversight. BlackRock insisted it would just follow the Fed's guidelines and not profit unduly. And indeed, their contract with the Fed had clauses to mitigate conflicts. But one thing was undeniable. By sitting at the Fed's elbow, BlackRock gained an unparalleled inside view of the markets and policymakers' thinking. A Yale professor observed that this role was definitely a boon for BlackRock's business, a chance to develop expertise and cement its position for the future. In plain English, BlackRock's government partnerships make it even more indispensable next time a crisis hits. And it's not just in the US BlackRock's influence extends worldwide. In Europe, its executives rotate in and out of top government jobs. In fact, the man poised to lead Germany in 2025, Friedrich Merz, had served as chairman of BlackRock's German arm for years. It's a striking example of how deeply embedded BlackRock is in policy circles. On any given day, you might find former Treasury officials working at BlackRock and former BlackRock managers working inside central banks and finance ministries. This revolving door spins so smoothly that BlackRock can influence regulations from both the private and public side. Little wonder critics say BlackRock's power raises questions about how it handles possible conflicts of interest. If BlackRock's story stopped at managing money and advising governments, that would be impressive enough. But in recent years, Larry Fink's ambitions have grown even larger. BlackRock is no longer content just owning shares. It's quietly buying the world's infrastructure out from under us. Think about the most important physical assets a country can have: ports, airports, pipelines, power grids, data centers. These are the backbone of the global economy, the board game on which superpowers compete. And BlackRock is grabbing properties all over the board. BlackRock's latest move reads like a geopolitical power play. In early 2025, a BlackRock-led consortium struck a deal to take control of 43 ports in 23 countries, including the critical ports at both ends of the Panama Canal. That's right, the Panama Canal, the gateway between the Atlantic and Pacific, had ports run by a Hong Kong company, CK Hutchison. After some nudging from Washington, CK Hutchison agreed to sell almost all of its global port holdings to BlackRock's group for $22.8 billion. Suddenly, those Panama Canal ports, Balboa and Cristobal, were set to be under American and BlackRock's control. U.S. politicians cheered this as reclaiming the Panama Canal from Chinese influence. The Panama government was less thrilled, insisting their canal isn't up for anyone else's taking. But the deal showcases BlackRock's new strategy: buy up strategic choke points of global trade. And it's not just ports. Around the world, BlackRock's investment funds have been snapping up pieces of energy pipelines, power generation, and even toll roads and airports. In 2024, BlackRock committed at least $30 billion to private infrastructure deals, including buying an infrastructure investment firm that specializes in exactly these kinds of assets. By taking stakes in global infrastructure partners, for example, BlackRock gained footholds in airports and utilities across several continents. Essentially, if there's a monopoly-like asset that a country or city depends on, a major airport, a telecom network, a highway system, BlackRock wants a piece of it. As one economist put it, these assets are like natural monopolies. Buy that and you have control. It's a monopoly. Why is BlackRock so interested in physical infrastructure all of a sudden? Larry Fink sees a colossal opportunity. In his recent letter to shareholders, he pointed out that the world faces a $68 trillion gap in infrastructure investment by 2040. That means governments and communities desperately need new roads, bridges, grids, and more. But public budgets are strained. Fink's vision is for BlackRock to step in and provide the private capital to fill that gap, and profit from it, of course. He's effectively betting that a global infrastructure boom will reshape investing, and he wants BlackRock at the center of it. This is why BlackRock is pivoting into private markets and alternative assets. Traditionally, investors split their money between stocks and bonds, the classic 60-40 portfolio. Fink is advocating a new model, something like 50-30-20, with 20% in private assets like infrastructure. BlackRock argues that if ordinary people's retirement money can be channeled into things like toll roads and data centers, everyone wins. Investors get slightly higher returns, and society gets new projects built. To make this happen, BlackRock is exploring cutting-edge ideas like tokenization, turning infrastructure investments into digital tokens so that even small investors can buy a tiny slice of a port or power plant. It sounds futuristic, but the goal is simple: break down the high walls that kept assets like ports in the hands of the ultra-rich, and open them up to broader investment. Of course, in doing so, BlackRock would collect fees and solidify its dominance across not just public markets, but the real assets that keep countries running. BlackRock's defenders will tell you that all this is just smart business and good for the economy. They'll point out that BlackRock doesn't own most of these assets outright. It manages them on behalf of clients like pensions and insurance companies, that's true. BlackRock typically is a steward of other people's money. Larry Fink often reminds critics that we are just the asset manager, implying they're not scheming to rule the world, just invest in it. But when one company's tentacles extend this far, questions and fears are inevitable. Consider voting power. BlackRock is the top shareholder in hundreds of major corporations, from tech giants to oil firms. That means Larry Fink can often pick up the phone to a CEO and have his voice heard, or vote on corporate decisions on behalf of investors. The firm has promised to pass more voting power to the actual investors and not throw its weight around carelessly. But skeptics wonder if any company should wield such sway over so many industries. There's also the concern of policy influence. BlackRock's alumni hold top posts in the U.S. Treasury, and its lobbyists shape financial regulations. During the 2020 crisis, BlackRock's role with the Fed was criticized because it was effectively bailing out sectors in which it had stakes, like corporate bonds. Who watches the watchers? If BlackRock is advising the government and profiting from the advice, conflicts of interest loom large. No other Wall Street firm has ever been so enmeshed in government responses. As the Politico headline blared during that bailout, massive bailout leaves Wall Street giant exposed to fire from all sides. Both progressive and conservative lawmakers felt BlackRock had become too powerful and needed more scrutiny. Internationally, think about a scenario where critical infrastructure is owned by a foreign consortium, with BlackRock at the helm. For example, how might Panama feel in a few years if tolls or fees at their own canals' ports are influenced by American investors? Even if BlackRock acts purely as a business, the geopolitical implications are huge. During the bidding for the Panama ports, China certainly took notice, as it could lose a strategic foothold in the Americas. We're talking about a finance company potentially tipping the scales between superpowers, all via business deals rather than elections or treaties. Then there's the ideological whiplash BlackRock has exhibited. For much of the 2010s, Larry Fink preached about stakeholder capitalism, the idea that companies should care for the environment and social issues, not just profits. BlackRock pushed CEOs on climate change and even joined climate alliances. But come 2023, BlackRock quietly pulled back from some of those ESG, environmental, social governance commitments. In fact, facing political blowback in the US, BlackRock left the Net Zero Asset Managers Initiative, a major climate pledge group. In a January 2025 letter to clients, Fink cited legal inquiries from various public officials and confusion about BlackRock's intentions as reasons for quitting the climate alliance. Translated, Republican politicians were accusing BlackRock of being too woke and even suing it for allegedly boycotting fossil fuels. So BlackRock appears to be rebranding itself as apolitical, dialing down the public talk of sustainability and diversity. Internally, reports say BlackRock has removed or toned down references to ESG and climate in its communications. This retreat has alarmed climate advocates, but it shows that at the end of the day, BlackRock will do what it must to remain the dominant player. If that means being less outspoken about climate to avoid the ire of certain lawmakers, so be it. So, what is BlackRock's endgame? Larry Fink is 72 years old and has built an empire that will likely outlast him. BlackRock isn't trying to take over the world in the cartoonish supervillain sense. It doesn't need to. By controlling the flow of capital, BlackRock already holds extraordinary power. It doesn't rule nations, but it can influence their fate by deciding where trillions of dollars go. Its $68 trillion global infrastructure gambit is just the latest chapter, aiming to secure the firm's dominance for decades to come. If successful, BlackRock will not only manage stocks and bonds, it will own key pieces of the physical world we live in, from ports to pipelines. Every toll you pay, every flight you take, every watt of electricity you use, a fraction of that money could be flowing back to BlackRock and its clients. Is this good or bad? It's a bit of both. BlackRock's investments can indeed build bridges, modernize airports, and speed up the green energy transition, if it chooses to. But concentrated power, especially financial power, always carries risks. Who holds BlackRock accountable? Governments are playing catch-up. Some lawmakers have called for BlackRock to be regulated more like a bank, given its size and importance. Others worry that no single regulator can oversee a behemoth that spans so many sectors and countries. We truly are in uncharted territory. One thing is clear. Larry Fink's quiet takeover has changed the world. The story of BlackRock is a reminder that sometimes the most influential people are not presidents or generals, but financiers operating behind the scenes. BlackRock's logo might not hang over city halls, but its decisions affect millions of jobs and retirements. Its reach can be felt in the price of oil, the interest rate on your mortgage, perhaps even the outcome of diplomatic tussles, as seen in Panama. As we conclude, take a moment to consider how you interact with this hidden giant. Do you invest in an index fund? Use a financial advisor? Have a retirement plan at work? Chances are BlackRock is involved in some way. This isn't to spark fear, but awareness. The more we understand who pulls the strings in our economy, the better we can hold them accountable. And finally, speaking of awareness, if you found this deep dive eye-opening, remember that knowledge is power. Subscribe to our channel for more stories that peel back the curtain on the forces shaping our world. We have many more fascinating topics on geopolitics and economics coming up, and you won't want to miss them. Don't just watch the world change, understand why it's changing. If you enjoyed this video, hit that like button and let us know your thoughts in the comments. Thank you for watching, and stay curious.